All right, everyone, welcome back for the episode of Carnivore Trades. Today is Thursday, May 4th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it today here. So May the 4th be with you for you Star Wars fans out there. But here we go. So markets are down 70 basis points here on the spiders. Triple Q's down 1/4%. And the Dow down a little bit as well. Russell kind of leading there to the downside, as we can see there. Much weaker here. Again, more regional bank fears, which we talked about yesterday. Pac West down 50% there. Western Alliance down 34. They came way off the lows though. There was the talk that Western Alliance was looking to be bought out. They came out today and denied that, and so now it's getting a little bit of a bounce. I would still avoid these right now. Take a look at KRE getting smacked down 4.5%. It is off the lows though, on heavy volume, so maybe this can get a bounce. It is still oversold, and lots of monthly chart support right into this area. If we look, we can take a weekly look as well. That big wedge pattern in 2020. There's your area you couldn't get above. You sliced through that and kind of tested basically all the way down to this turnaround pivot there. So it tried to break down below that wedge. And then you got that green bar. Usually that's going to be good support. So not terrible there. Ultimately, I just don't see a ton of upside in here. Yeah, can they retest 40, 41 here in the short term if we get a nice snapback? It's oversold. Yeah, absolutely. I just don't see a lot of upside here in the regionals. Again, like I've said, I don't see a ton of downside either, at least not right now. But I just think it's a good trade to avoid here. Now, obviously, the markets right now, Apple, I would be doing this after the bell. Apple reports at 4:30, though. We'll be doing a members-only live stream where we'll cover this in real time. So I am doing it a bit early, obviously. But you can see here on the chart, we do have a breakdown of this rising wedge we've been following for quite some time. This doesn't mean anything, though, because earnings it's a total crapshoot. It could gap up as high as, I think, expected moves got us up to 175, and I think down to about, I want to say 158 or 157, somewhere in that area. So, I mean, you could break down and go to the 50 MA, and that would essentially confirm this rising wedge breakdown. If you push up, I think that would probably be about it for Apple. You're going into a lot of resistance up there with that pivot high, also these pivots here as well. And also, for the most part, overbought here. You could possibly put in an island up there if we went up there. The way that this market is behaving, my guess is, if I had to weigh in, we'll probably settle around 167.50, which is where we closed yesterday, for an indecision kind of candle, which, would hold the markets up. But, this market loves indecision right now. And that's really the environment we're in until proven otherwise. Bears had a good, stronghold today. They pushed the markets lower. Obviously, we've come off the lows here. And if we take a look on the hourly, that's not the hourly. There we go. We do have a nice inside bar here on the SPY. So, have a down move, big power bar on the hourly time frame, and you're inside of that. And really the same thing. The Russell is definitely on the weaker side. Same thing there with the Russell. And the Dow, the triple Qs are behaving a little bit better here. We start seeing some big tech names holding up okay. I think Amazon up 0.5%, Microsoft up as well. By the way, AMD, all you got to do is say AI. So they're partnering with Microsoft to make some new AI chips. And that's all they needed to be up 7%. And basically, they did fill that earnings gap and came way off the lows there. Nice, we talked about this yesterday. Maybe said it was in a decent support, maybe could get down to 78. But, that 100 moving average held, and it was kind of already a little beaten up already, so it was probably due for a bid anyway. But, they mention AI, and of course, that's all you need to do these days. And it got a nice bid off of the lows. Although the rest of the semis here, they're still down, 0.25%. Got a nice pop there with AMD and then came off the highs here. NVIDIA under pressure. So usually NVIDIA likes to bid up, positively correlated with the rest of the semis. I guess maybe, AMD's taking some of their market share with that. So they're not really getting that bid. It's still holding the 20 moving average for now. But either way, into a lot of resistance up here, and I just think it's very top heavy. But again, we're seeing some big tech names hold up again, but it's all about Apple. If they surge up, then the markets can be saved here. I think we are a little short term oversold here. We've basically gone from where is it, 417.62 all the way down to 407, so 100 points here in 4 days. So the big move. But again, like I've been saying, the bulls didn't build any supports on this move up. It was just a gamma squeeze, so you can take it down just as quickly. And it, like I said last week and on Monday, when people made fun of me for being cautiously bearish, we had a 1-2 surge here in March, and it was the same exact setup Thursday, Friday, and you had no supports built on the way up, and we knifed right through all of that. And that's exactly what we've done this time. So now we've tested that 404 area, 403.78 was the low, and then today 403.74. So just a double bottom pierce, but again, we do have that broadening wedge there. I would have felt better about calling a short-term bottom here if we had tagged that 50 MA as well as this lower trend line. But again, it doesn't really matter. It's all about Apple. If they gap up to 170 or surge up to 170, then the market can float back up. I do think bears show up around 410, 411 though, just for what that's worth. And we're not going to just blow through that unless Apple really pumps up to 175. And then maybe you can get a little bit more upside here. But I think that's really the last bullet bulls have right now. Unless you get some type of other news, what's really left to rally on. The bulls have had this on a silver platter for the last month. And granted, the bears haven't been able to do anything either. But, I mean, can you break it out? Or, what's taking so long? You had all the momentum on Monday. You had a big 1-2 surge. You could have had a 1-2 pullback and then a pop. And that didn't happen. The triple Qs here, they're holding up well. There's nothing terrible here. About to lose that 20 moving average potentially, but again, like, where's the breakout? So that's kind of my question. I think the bulls are kind of running out of time to do this, and even if they do push us higher, I just don't see a ton of upside. Really, 420 to 422. We've mentioned that for a while. Those are the levels. And on the downside, you lose 404. Again, we didn't build any supports here. We just overnight gapped up on Fed liquidity, on the discount window, all that good stuff that they love to do. But you're probably going to go down and test 400 if that happens. If you lose that, you got to go down here and test 395, which coincides with this trend line and the 200 MA. So those are your areas down there. If we break, if they pump us up one more time, you know where we're going. So then the triple Qs here, same thing really. Again, we're watching that upsloping rising wedge trend line, and of course the downsloping one as well, which kind of almost coincides with that 50 MA there. I did move this trend line down. Previously I had it kind of like that, but I think it's probably just a little bit better if we just do it like this. But either way, those are the levels there, and we'll continue to watch that. It's all about Apple. After the close, Russell 2000 is a absolute dog. Bear wedge there. We've been mentioning that for weeks. And on the weekly, you can see there's the bear wedge again, and a big monthly bear wedge. You take out these pivots, this is going down to 140. So Russell on its last legs here, they needed, they're going to have to come up with some magic again to save those KRE. KRE makes up not KRE, but the regional banks themselves make up a huge chunk of the Russell. And again, this is a big leading indicator of the downside. You need small caps to be leading if we're bullish, and they are certainly not doing that right now. The Dow down 81 basis points here, still holding that 331 area, 331.45 to be exact. That's been a purple trend line, kind of a point of control, that purple trend line there, really since the gap in 2021. You see all these tags here, tag, and it's been a decent POC. So we'll see if that can that hold over the next couple of days. Again, Apple is in the Dow, so that will help it out a little bit. It's not a huge price cap stock because it's only 160. There's definitely a few others that are a lot bigger, but it will help obviously psychologically. But Dow holding that 50 MA for now. Anyways, over to the semis. Again, on the weaker side, down 0.25%. Again, we talked about the 20 MA test. This trend line test essentially. And it did back off of that, and it is red even with AMD up 7%, so that is a little bit of an issue. Again, I just don't see the semis making new highs, and I think they are talking to us about the strength of the market. Same thing with cloud. That's follow through to the downside there. So down move, kind of bear flag, 1, 2, 3 to the downside. This should still have some support. I think I told you around 283, 285 if it gets down there. But again, market leader turning into a market loser there is cloud. So we'll watch that moving forward. It is a little bit off the lows, though. If Apple blows out, and I'm not saying it can't drag it back up to, 296 here in the short term. But yeah, definitely cloud still on the weaker side, as are the transports today. So they had a nice, they were up in a down tape yesterday, not by much, but they were. And then back down, testing 13.8 today, getting a bounce off of that, but still just, inside chop. So big down move, and you're just inside of this. So you really need to get above, 14,374, 14,375 we'll call it, and this trend line to have some real strength here. But again, lower highs, it's been like that since February, and that's telling us something about the strength of the economy as well as the strength of the market here. In bond land, 2-year getting a little bit of bid here, so that did continue up. This might be telling us, I said this yesterday, this might be telling us that the Fed is done hiking. The market's now trying to price in rate cuts for July. That's where I think bonds are wrong. And even if they do cut, it's not going to be what people think. We're not going back to ZERP. It's not happening. So even if we do get a small cut, that's really all it will be. But I think they really want to get up to that 6% terminal rate at this point. But they can pause. They definitely can pause. The 2-year yield is well below the Fed funds rate, so there's nothing to say they can't do that. So I think that they probably will pause in July. But the market, I think, is getting it. It's getting it wrong that they're just going to start cutting. I don't think we're in that environment. It's not going to be your typical recession where unemployment surges, where energy goes to zero. The energy will back off. Specifically crude, but there are way higher floors now, and that's a problem. But right now, bonds getting a little bit of a bid, still range bound. There's ZB that was actually down a little bit, so yield curve kind of coming back in. As you see, the 10-year red today with the 2-year up, so yield curve kind of getting a little bit of relief there. That also could be a signal that the Fed is close to stopping, because now that inversion is only at 40 basis points. So that's kind of, it's starting to creep back, towards normalcy. Obviously, the recession tends to start when those yield curves normalize. But the 3-month 10-year just hit an all-time low. So there's that as well. Down to 100, I think it went down to, I'm just going to show you because you got to see it. It got down to 200 basis points inverted. That's insane, at 215. So, and they say it's just going to be a mild recession, but anyways, let's get over here to housing. It's a weak tape if XHB and ITB is down. It's still in an uptrend there. Pulte Homes, of course, Pulte Homes is green, God forbid that as a down day. But, some of these home brothers still holding up okay. Toll Brothers, down a little bit here. KB Homes down, modestly. So XHB and ITB coming in a little bit. Nice outside move there for XHB and ITB. But, I really still need to see them kind of confirm to the downside and really break these trends here. They're still holding up really well at the moment. VMQ hanging in there. Okay, this is just in the range. I just don't like this at all. It's taking way too long to break out. You should have, you had 7-8 days of consolidation here, and it's taken you a month to get through that. That tells you it's weak. XLF down with every other financial pretty much today. It did come off the lows. It's hanging in there okay. Trying, it's got room for a higher low. It's trying, but just not a great tape here. You had kind of like almost kind of like a bear wedge there, and it kind of broke down earlier this week. Due for a little bit of maybe a short-term bounce, but I do not like the financials. We talked about KRE already. That may have bottomed here in the near term. I just don't really see a ton of upside for it. And the reason I say that is you got a big tail candle with really heavy volume going into a lot of weekly support, but I don't think there's a ton of upside either. KBE also hanging in there okay. XBD broker dealers slicing through 420. I told you guys don't think 420 can hold. So here's a good little piece for you to hold on to. When you consolidate above support, it means you want to go through it. It's building up strength and compression to be released. You only want support or resistance when you're overbought or extended or oversold. If we go down here and to 400 next week, then you could probably look for a bounce there. It would probably, I would think it would probably pierce it because there's a lot of velocity behind that. But that's why it's able to slice through that so easily. Now, who knows? Maybe they can save it by tomorrow. Maybe Apple, cranks the market up and we get a relief bid. It's a little oversold here anyway. But just, little piece for you of a methodology moving forward there, but slicing through that 420 handle. By the way, if you haven't done so already, hit the like, subscribe button there. But anyways, let's get over here to energy. Crude, nice bounce. So somebody got margin called for sure. There's no doubt about that. As soon as the futures opened last night at 6 p.m., bam! 68 down to 63 and change, and then right back up there. So someone got margin called. This was already really oversold, and I talked about this already in the video yesterday. But nice bounce there. You went into a double bottom essentially, and it pierced it. But you're down. This was down. I think you got to go from, well, we'll just use, I think it was like 9 a.m. I was looking at 9 a.m. Tuesday, all the way down to 64. So that's 10 points. I think we'll say 10 by 75. So that's down. It was down 14% in like 8 to 10 trading hours. And this isn't Pepe coin. This is crude, right? So it's a massive move. Either way, I think it's probably put in a short-term low here. You should get like a zigzag up. I like it in this area. Nice hourly kind of consolidation there for a move through 70. If you get through that, you got 72. And then ultimately, I think it could potentially get back up to 74, 75, which, like I said previously, is just basically back testing this previous upsloping trend line. After that, I think it goes lower. But right now it's hanging in there okay. Nice bounce, way oversold. And another reason I think it can bounce, take a look at XLE again. We talked about this trend line here. That should be good for one more bounce. After that, this can break. Don't rely on it further. But XLE lower today. We'll see what that does tomorrow. XOP, basically into this green candle again. Should bounce here. Again, 125 is probably your max move here in the near term. OIH double bottom. That is off the lows, up 60 bips. We'll say 270 maybe in the near term. If you get through that, then 275, 277. But yeah, it is holding that little double bottom for now, so it's hanging in there. Nat gas continuing to kind of languish. Ever since that big pop last Friday, just it's been kind of a dog there. Just hasn't been able to hold the gains. It really, to me, it's got to come down to that euro there. And once that tops out versus the dollar, obviously, I think that's when you can kind of see it get going. But until then, just still kind of stuck in this range here. And sellers kind of regaining control ever since that pop Friday. So we'll see what it does going into the end of the week. If we look over at the DXY here, so that just kind of hanging in there sideways. I am just, at this point, I'm really kind of, I really would like it to get down to that 100 handle and through that, because I think it would mean a lot for pretty much every asset class. I think that could be a potential turning point. Maybe narratives start to change potentially once that happens and you get a dollar bottom here in the near term. But for right now, it's hanging in there. It did lose a 20 MA. You could kind of make a case that it's, not really the best pattern, but let's look on the weekly. You kind of have somewhat of a bear flag here. It's not the best, but that could, get you down to that 100 handle, a Pierce of 100. So that's kind of where I'm looking at for the dollar to go, as you guys are aware. But, it is hanging in there for now. I would just prefer it to push lower. And I think a lot of narratives can change in many asset classes if that happens. But we're not there yet, so we'll continue to wait. Gold almost hit an all-time high last night by $4. It was off. It probably will hit an all-time high, and I think that would definitely coincide with the 100 handle on DXY. So if you get one more dump out on DXY, there's no reason why we can't push up. This bid up because more bank fears, right? People want real money. What is gold, right? So people want real money, and you got that big spike. Take a look here. Right at the same time, that clearly a margin call on crude, right? And then it came way back in, but it's still holding up. So this can get to all-time highs. I just don't see it advancing much after that, at least not right now. Again, typically gold does really well before the recession, but then you have it kind of comes under pressure during the recession, and then it bottoms before everything else. So that's kind of what I'm looking for here, but you got to respect it while there's banking fears out there. Silver, same thing, making new highs here. I just don't see a ton of upside here for silver either. Just a lot of weekly resistance, but it's holding up well, and obviously commodities tend to overshoot at times. Platinum, trying to hold on to that 1040 area. This is holding up okay. Nothing really terrible with it right now, but it does need to get a pop here. It is kind of lagging PMs right now, at least gold and silver. As long as it holds this 1040 area, I don't see any real issues with it at the moment. And then copper here, also on the weaker side, still an inside bar. This is ready to go. So this can go tomorrow, maybe Monday. Yeah, you got a nice setup there on copper, actually, for a move to 375 now. I know I've been saying that for a while, and it continues to defy me. But I think it's about ready now. And it has, each time it's rallied back up, it's put in lower highs as well. So I think that's going to be where it wants to go. Maybe even down to 372, 373 here. But that's actually not a bad setup there on copper for a little move lower. All right, over to Bitcoin here. Bitcoin under a little bit of pressure here, losing that 29,000 handle. Really just sloppy action. If this shapes up a little bit more, I can't rule out one more pop, but right now, very sloppy. Again, same thing though, if you lose these pivots down here, it's down to 25, 24, and then I think it's topped out. But for right now, it's holding up okay. Can't really say that it won't go up and test 32 to 32.5 at the current time, but again, maybe Apple has a lot to do with it. And again, banking fears, it is bidding up a little bit on that as well. So we'll see what we get. Anyways, spiders here hanging in there, just kind of grinding in this range. They're definitely just waiting on Apple. So we'll see what we get moving forward. Again, the levels we're watching here, that 50 MA breaks on a daily close, you're going to 400, and then probably 395. Outside of that, if they squeeze this up one more time, again, it's still, looking like this broadening pattern could get one more hit, and it coincides right there with that gap fill, 420 even round number. So that would be kind of your target there on the upside if we can get up there. Anyways, guys, gonna wrap up here. You guys take care. Don't forget to find me on carnivoretrades.com, subscribe to the channel. I'll talk to you guys all tomorrow.